Let's get some trader talk now from Alan Knuckman, the chief market strategist at St. Paul Research. And Alan, stocks have been trending higher this week.
Hi, Angie. No fall. This asset ascent continues, and it's making new highs in crude oil and in stocks.
How are your trades coming along? You've had a lot of winners.
All right, let's talk about our current trades. Obviously, we've been very optimistic and bullish. Now, we use this recent rally to get for our first targets in Apple at 50%, sell half our positions, and also in U.S. Steel in just 2 weeks, sold half our positions there for a 50% gain. Now, we'll hold on. We still got plenty of time in the second half. We'll put in a target at 100%, which is the power of this strategy that modest moves in the underlying stock produce big gains in the options. We're still holding DuPont. We got into last week, and American Airlines, that we're looking to get some air on that. January options, so we got 3 months of time in American Airlines.
What's your latest trade?
All right, this week's trade triggered. Let's talk T time. T, AT&T, an old dog. This stock's 25% off its May high, and we've got a quadruple bottom over the last 3 years here at 25. So what we've seen is bullish divergence, meaning it made new lows, but we did not see new highs in volatility. It's a very positive sign. It's been trading between 25 and 35 for the last 18 months. We'll see if we can get back up 30 and get some legs underneath it. So also this stock has got a PE of 8. So it's a cheap stock beaten down as the rest of the market's gone up. Now, this is a perfect example of our strategy, stock substitution, buying an in-the-money option instead of the stock. So if you bought 100 shares of this stock, it's at 25, it's going to cost you $2,500. What I'm looking for here is the June option. Yes, June, 8 months of time. The June 23 call is trading for about $300. So you can see it's much less expensive, but gives you the right to be long from 23, where the stock hasn't been since 2011. So that option's trading for about $300. It is $2.50 in the money. So the break even, the expiration break even in June of 2022 is 50 cents up above.
Alan, what are the 3 takeaways we need to know about the market today?
All right, trading takeaway number 1, learn about earnings. We've learned a lot from these earnings, that you can crunch all the numbers you want. Great numbers on revenues, great numbers on earnings and exceeding expectations. Everything's positive. The net result is what's important, is how the market reacts, and we see the stock market loves these earnings announcements. Number 2, 4,800 not far. We've talked about this a couple weeks back, that was our technical target after that drop in the S&P. Now, if you look at this technically, we've had 3 stair steps in the S&P so far this year, where it consolidates for 30 to 40 days, then it rallies 7%. Consolidates for 30 to 40 days, rallies 7%. So if that happens here, then we're looking at 4,800 in the S&P. And number 3, tremendous tech. Another complete V recovery rally. Tech has made a complete turnaround, new highs again this week. So now it's the S&P, the Dow, and NASDAQ all up at all-time forever highs. Now we've seen 5 10% pullbacks since 2019 in tech, and every single time it's bounced back the distance of that drop on the old top. So that targets NDX 17,000, which is 8% away.
You are right. We are never too far from setting a new record high. Thanks so much, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.